This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending August 6, 2022. Our question this week is, what is market capitalization? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average increased 0.23% on Friday, but was down minus 0.13% for the week. The S&P 500 decreased minus 0.16% on Friday, but was up 0.36% for the week. The Nasdaq decreased minus 0.5% on Friday, but was up 2.15% for the week. Looking at the week, we can see that there were 10 down finishes versus 5 up finishes for the major indexes. On Monday and Tuesday, all the major indexes finished down. On Wednesday, they all finished up. On Thursday, the Dow Jones Industrial Average and the S&P 500 ended down, while the Nasdaq finished up. And on Friday, it was the Dow Jones Industrial Average that finished up, while the S&P 500 and the Nasdaq finished down. The new unemployment claims were 260,000 versus 260,000 expected. Payrolls increased by 528,000 in July. U.S. household debt topped 16 trillion for the first time. Mortgage applications rose 1.2% for the week. Home prices fell 2%, and the U.S. 10-year Treasury yield jumped above 2.8%. New unemployment claims, payrolls increasing, U.S. household debt topping $16 trillion, mortgage applications rising, home prices falling, and the U.S. 10-year Treasury yield jumping are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is market capitalization? Market capitalization, or market cap, is the value of a corporation that is calculated by multiplying the total number of outstanding shares by the current market price of the shares. Publicly traded companies are generally categorized as being either large cap, mid cap, or small cap. Large cap companies are corporations that have a market cap greater than $10 billion. Mid cap are corporations that have market caps between $2 and $10 billion. And small cap are corporations that have market caps less than $2 billion. There are several investment strategies centered on the market cap of corporations. Some people only invest in large cap companies, while others look to invest in small cap companies, thinking that they have more room to grow. What are the market capitalizations of your stocks? Are they large cap, small cap, or mid cap? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending August 6, 2022. The strongest performer on the list this week was Editas Medicine Incorporated, ticker symbol EDIT. It's in the third column. It was up 1.41% on Friday and was up 22.06% for the week. Editas is a clinical stage genome editing company that focuses on developing transformative genomic medicines to treat a range of serious diseases at the genetic level. Looking at a summary of results, you can see that Editas has decreased minus 26.85% year to date. I did not trade or generate cash flow from Editas this week, but I may in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is a benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 Index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 Index ETF SPY. The Southside portfolio is up 0.45% versus minus 12.9% down for SPY, a difference of 13.4%. The Southside is beating SPY by almost 13.5%. The cash flow generated by the Southside cash flow system for this week was 5% of the portfolio account value. The account value changed by 5.93%. Meanwhile, the S&P 500 ETF SPY changed by 0.36%. Bitcoin watch. Bitcoin lost almost 4% this past week, and it continues to be in a bear market. It has lost 66.5% of its value from its all-time high, which was achieved in November 2021. I sold option contracts on two positions this week, one call and one put, that ranged from $85.39 to $126.71. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week in order to increase your financial IQ and understanding of the stock market. The videos are organized in playlists. There are levels 1, 2, and 3. Level 1 is for beginners, and level 3 is for the more advanced investors and traders, and of course level 2 is in between. The videos are also arranged by subject area. In the meanwhile, please like, share, and subscribe.